All right, so let's dive into something I think a lot of people are thinking about these days.
Yeah.
Mortgages.
Big one.
It's a big one. And getting that dream home, even if you don't fit what people consider the traditional borrower mold.
Right, right.
We've got some great stuff here. You sent me 3 blog posts. Mastering mortgage management.
Okay.
Mastering the mortgage maze, specifically for self-employed folks.
Okay.
And navigating the mortgage maze, which is a little more general.
All right.
So what we want to do is kind of give people the knowledge they need to go into this process feeling confident, no
Absolutely.
matter what their circumstances are.
Yeah, it's amazing how many people think there's just one way to get a mortgage when in reality, the financial world is way more flexible than we think.
Okay, so let's unpack that a little bit, starting with diverse income streams.
Okay.
The Mastering Mortgage Management post really kind of emphasizes this thing they call distribution income.
Mm-hmm.
I had to look this up.
Sure.
What is it and why should we care?
So think about distribution income as money coming in that's outside of your primary job.
I got it.
So it could be dividends from investments
Okay.
or rental income from a property
Right.
or even royalties from, that hit song you wrote back in college or something.
Sure.
The big thing here is that lenders look at this as a sign of stability.
Mm-hmm.
It's like having multiple streams feeding into your financial river, if you will,
I like that.
makes it less likely to run dry, right?
So it's not just about how much you make, but it's about where it's coming from.
Yeah.
And having these multiple streams shows that you're resourceful and resilient.
It shows you're a problem solver, right?
Yeah.
So for example, imagine you have, a side hustle that you've been doing consistently for a couple of years.
Right.
And you're earning good money from it.
Yeah.
That shows a level of responsibility and stability that lenders love.
You're already thinking ahead to what those lenders are thinking.
Exactly. And what about if you have rental income? Maybe you have a property that you're renting out.
Sure.
That shows them that you're managing assets and generating passive income.
That's a good point.
Which creates a strong financial picture.
Now, this is getting me thinking about my own stuff.
Right.
I'm trying to figure out how I can diversify my income streams.
Yeah. Well, there you go.
Now, what about unemployment benefits?
Yeah. Okay.
I was reading the Navigating the Mortgage Maze post, and they mentioned that some lenders actually consider those.
Yeah.
I was surprised by that.
I know, it's true.
Really?
Not every lender is on board with this yet, but some of them do consider unemployment benefits as income,
Interesting.
especially if they're expected to continue for a while.
So it's not an automatic no.
No.
It's a matter of, presenting all the information.
Exactly.
Being transparent.
It's all about the big picture.
Yeah.
So if you are receiving unemployment benefits, don't just assume you're automatically disqualified.
Right.
Talk to different lenders. See what options are out there.
You never know. Okay, so this is why we dig deep.
I love it.
Because you just never know what you're going to find.
That's right.
Okay, let's talk about something that can be kind of nerve-wracking.
Okay.
Recent job changes.
Yeah.
It's understandable that people would be nervous about this when they're applying for a mortgage.
Oh, absolutely. It's a big concern for a lot of people.
So what's the advice if someone's listening and they're in that situation?
Well, the key thing to remember is that lenders value stability.
Okay.
But that doesn't always mean being at the same job forever.
Right.
They want to see a consistent work history.
Right.
And, of course, a stable income.
That makes sense.
But, changing jobs doesn't have to be a deal breaker.
So how do you demonstrate that stability if you have a new job?
Well, the Navigating the Mortgage Maze post had some good advice on this.
All right.
They said documentation is key.
Oh, I like that.
So you want to gather up those offer letters,
Okay.
employment contracts, pay stubs, anything you have.
Right.
These documents paint the story of your work history.
So you're telling a story
Exactly.
with these documents.
And you're proving that your new position is secure
Right.
and reliable.
It's all about showing the lender you're responsible,
Yeah,
even though you've made a recent change.
exactly.
Okay, let's talk about something we all love.
Ooh, I like this.
Cash. So the Mastering Mortgage Management post talked about how cash reserves matter, not just for the down payment.
Right.
Why is this so important?
Well, you know what they say, cash is king.
It is.
It's pretty powerful in the mortgage world, too.
Okay.
It's not that the lender's going to come take your cash reserves.
Right.
It's more about what having those reserves signals.
What does it signal?
It shows responsibility, preparedness.
Got it.
It tells the lender that you can handle those unexpected expenses in life,
Right.
that you're not living paycheck to paycheck.
Yeah, that makes sense.
It's like having a financial safety net.
A cushion.
Exactly, a cushion.
to fall back on.
And that gives the lenders peace of mind.
Yes. It shows you can handle the ups and downs.
Exactly.
So even if you're not planning to buy a house right away, building up those cash reserves
It's a smart move.
is a smart move.
Not just for mortgage.
Just in general.
Just for life in general.
Now, there's a tip in the Navigating the Mortgage Maze post
Okay.
that I found super interesting.
All right.
It said that owning less than 25% of a property can actually be a good thing
Oh, yeah.
when you're applying for a mortgage.
Yeah, this one surprised me at first, too.
Why that?
Well, it comes down to understanding the lender's perspective.
Right.
Sometimes owning a really big chunk of a property can actually be seen as a potential burden,
Okay.
from a financial standpoint.
Yeah.
So if you own less than 25%, it might signal to the lender that you have a more manageable financial situation.
And less risk?
Exactly, less risk. They're not worried that you're overextended.
Okay, that's a really good tip.
Yeah. And I bet it comes as a surprise to a lot of people.
Yeah, it did to me. Now, let's talk about a group of borrowers who often face unique challenges.
Okay.
The self-employed.
Yeah.
The Mastering the Mortgage Maze for self-employed borrowers is all about this.
Yeah, they definitely have their own set of hurdles to overcome.
What are some of those hurdles?
Well, the biggest one is proving consistent income.
Okay.
Those traditional lenders love to see those steady W-2s
Right.
and pay stubs,
Sure.
which self-employed individuals don't always have.
So what do?
Documentation is super crucial.
So what kind of documentation are we talking about?
Well, the post really emphasized tax returns, and not just the most recent one.
Right.
They want to see several years' worth.
So of a history?
Exactly, a consistent history of income.
Okay. Here.
You'll also need profit and loss statements and any other financial documents that can really show the stability and profitability of your business.
Right. So it's like painting a clear picture.
Exactly.
Even though it might be a little more complex.
Right. It's a different kind of picture, but it still needs to be clear.
And finding the right lender is also key here, right?
Absolutely. Not all lenders are created equal.
True.
And some are way more experienced with self-employed borrowers than others.
So do your research.
Yeah. Definitely shop around.
Find someone who understands.
Exactly. Someone who gets
The
it.
ins and outs of self-employment income.
And someone who's willing to work with you.
To build that strong application.
Precisely.
I love that.
Good.
So much good information already, but we're just getting started.
I know, right?
In part 2 of this deep dive, we're going to be exploring even more tips and strategies
Can't wait.
to help you master the mortgage maze. So stay tuned.
I'm ready. Welcome back to our mortgage deep dive.
All right, so more insider tips.
More insider tips.
That's right. To help people ace this application process.
That's right. So let's talk about something that people don't always like to talk about.
Okay. Debt.
Ooh. Yeah, that's the elephant in the room sometimes.
It is. And not all debt is created equal.
Especially in the eyes of a lender.
That's right.
So understanding how they view different types of debt is really important.
I'm ready to face it head on, break it down for us.
Okay, so let's imagine for a second that you're a lender.
Okay.
And you're trying to decide if someone's going to be able to repay a loan.
Mm-hmm.
You'd want to look at their income, obviously.
Right.
But you'd also want to look at their existing debts.
Yeah, to see if they can handle it.
Exactly. You want to gauge their financial stability.
Okay.
And lenders use something called a debt-to-income ratio.
Okay.
Or DTI.
DTI.
To do just that.
So that compares like how much you owe every month
Exactly.
to how much you're bringing in.
It's a simple calculation.
Lower the better.
The lower the better, you got it.
Right.
And here's where it gets interesting.
Okay.
Different types of debt actually carry different weight in that DTI calculation.
So explain that.
Think about it, a student loan
Okay.
that has a low interest rate
Right.
and a long repayment term is going to be looked at differently than, say, a maxed out credit card
Got it.
that has a high interest rate.
Higher interest rate.
Yeah, so even if you have a lot of student loan debt, it might not impact your DTI
As much.
as a smaller amount of credit card debt.
Interesting.
It's all about how lenders assess risk.
Okay.
And here's another wrinkle
Okay.
that people don't always think about.
What's that?
You might be carrying debt that isn't even yours.
Whoa, hold on.
Right?
How is that possible?
So the Mastering Mortgage Management post talked about this. It mentions situations where people kind of unknowingly assume debts.
Yeah.
Maybe they co-signed a loan for a family member.
Right.
Or they're an authorized user on someone else's credit card.
So it's like hidden debt.
It can be lurking in the shadows of your credit report.
That's a really good point.
Affecting your mortgage chances.
Okay. I am now officially motivated to go check my credit report.
It's a good idea to do that regularly.
Now, let's go back to employment for a second.
Okay.
We talked about recent job changes.
Yeah.
But what about those who are employed by a family member?
Okay.
I've heard that can be a red flag for lenders.
It can raise some eyebrows.
Is that true?
Yeah, because lenders want to make sure that your income is legitimate.
Right.
And stable.
Not just a favor.
Exactly. Not just a friendly arrangement.
So how do you prove that?
Documentation is key again.
Documentation.
The Mastering Mortgage Management post had a good suggestion.
Okay.
They said provide a detailed employment contract,
Okay.
pay stubs,
Mm-hmm.
anything that shows the legitimacy.
Right. So you're being extra clear.
Exactly. You want to be super transparent.
That makes sense.
And you might also need to show that you have a history of managing your finances.
Independently.
Independently, separate from your family member.
Separate from your family member. Yeah. Good point.
Okay, let's shift gears a bit.
Okay.
And talk about something that's often overlooked.
All right. Communication is key.
It is. It's not just about gathering the right documents.
Right.
It's about how you communicate with your lender.
I love that you're bringing this up because it's so important in any relationship.
Oh, absolutely.
Especially one as big as this.
So what are some communication tips?
Yeah. What can make or break an application?
First and foremost, be upfront and honest.
Honest.
Don't try to hide anything.
Right.
Don't embellish your financial situation.
Lenders can probably see through that anyway.
They can. They're pretty savvy.
Okay.
But when you're transparent, it builds trust.
Yeah. Honesty is the best policy.
It really is, especially with finances.
Okay. What else?
Be responsive.
Correct.
If your lender asks for something,
Like a document,
clarification, whatever it is,
get it to them.
get it to them quickly.
Okay.
Show them you're serious about this.
It shows you're on top of it.
Exactly.
Yeah.
And here's a tip that can be really empowering.
Right.
Don't be afraid to ask questions.
Ask questions.
If you don't understand something, speak up.
Yeah. Why not?
The mortgage process can be complicated,
It can.
and your lender is there to help you through it.
That's their job.
That's their job, so use them as a resource.
Find a lender you feel comfortable asking questions to.
Absolutely.
It's a partnership.
It is.
Now, what about timing?
Okay.
Does it matter when you apply?
You know, timing can definitely play a role,
Okay.
especially in today's market.
Yeah. Things change quickly.
They do. Interest rates can fluctuate.
Right.
Lending criteria can change.
Yeah.
Economic conditions can shift.
So you got to stay informed.
You gotta stay informed. Staying up to date on market trends can help you time your application strategically.
So it's not just about your finances.
Right.
It's about the bigger picture.
The bigger picture, exactly.
Okay, so what do we do?
Well, keep an eye on interest rates.
Okay.
You know, watch the financial news.
Mm-hmm.
Talk to your lender about the best time to lock in a rate.
That's a good point.
It can make a big difference in your overall costs.
So you're really emphasizing being proactive.
That's right.
Informed.
Informed.
With the process.
It's your journey.
Let's be real, though. This process can be stressful.
Oh, it can be.
That's a big deal.
It's a big decision. It's a lot of money.
What are some tips for managing that stress?
Well, one thing to remember is that stress often comes from feeling overwhelmed
Right.
or out of control.
Yeah.
So the best antidote to that is knowledge
Okay.
and preparation.
I like that.
The more you understand the process,
Right.
the less intimidating it becomes.
Yeah. Like you have a plan.
Exactly. It's like having a roadmap.
Instead of wandering around aimlessly.
Exactly. You know where you're going.
Okay, good tip.
And don't be afraid to delegate.
Oh.
If you're feeling really overwhelmed,
Mm-hmm.
consider hiring a mortgage broker
Okay.
or a financial advisor.
That's a good point.
They can be amazing resources.
Like having a guide
They're like your Sherpa,
through this crazy process.
leading you through the mountains of paperwork.
That's a good one.
And they can provide expertise support, even a little bit of hand-holding.
When you need it.
When you need it, exactly.
Exactly right.
And remember, you're not alone in this.
That's a good point.
Millions of people go through this every year.
Right.
There are tons of resources out there to help you.
This has been so valuable.
I'm glad to hear that.
We've covered so much.
You know, right?
From understanding debt to navigating that family employment situation,
Right.
the importance of communication,
Yeah.
timing,
Timing is key.
even managing stress.
You got it.
I feel like I'm ready to take on the world.
That's the spirit.
All right, so in part 3 of this deep dive, we're going to explore even more strategies for mortgage success.
Can't wait. I'm ready when you are.
Okay, so we're back for the final part of our Mortgage Mastery series.
I'm excited to wrap this up.
I feel like we've learned so much already.
Me too. It's been a great deep dive.
But I know there's still more to uncover.
Oh, yeah. In this last part, we're going to get strategic.
Okay, I like that.
We're going to talk about how to really optimize your approach to getting a mortgage.
I'm ready to get strategic. Yeah. What's our first move?
Let's start with down payments.
Okay.
Often the biggest hurdle for home buyers.
Yeah, it can be a lot of money.
But there's a lot more to it than just saving up a huge lump sum.
Oh, okay, so tell me more about that.
So we need to challenge this idea that you always need 20% down.
Right. I've always heard that.
It's true that a larger down payment can get you a lower interest rate
Okay.
and lower monthly payments.
Right.
But it's not the only way.
So there are other ways to get into a home.
Oh, yeah, absolutely. There are loan programs specifically for people with smaller down payments.
How small are we talking?
Sometimes as low as 3%.
Really? So you might be closer to owning a home than you think.
Exactly. You don't need to be sitting on a mountain of cash.
Okay, so what are some of those programs?
Well, there are government-backed programs
Okay.
like FHA loans. They're insured by the Federal Housing Administration.
So the government's backing them.
Exactly. And there are VA loans, which are guaranteed by the Department of Veterans Affairs.
Okay.
For veterans,
For veterans, these are designed to make homeownership more accessible.
so they're trying to help people.
Yeah, often with more flexible credit requirements.
Okay.
And those lower down payment minimums we were talking about.
This is great news.
It is, don't count yourself out just because you don't have a ton of cash saved.
Yeah, there are options.
There are always options.
Okay, so we've got those government-backed programs. What else?
Have you heard of down payment assistance programs?
Down payment assistance.
Yeah, a lot of people don't realize these exist.
What are they?
Basically, many states and local governments offer programs that can actually give you grants or low-interest loans.
Wait, hold on. Free money?
It's not exactly free money,
Okay.
but it's pretty close. It can really help with that down payment.
So where do we find these programs?
Your state's housing finance agency is a good place to start.
Okay.
Or your local government website. There are also national organizations that keep track of all these programs.
Okay, so there's info out there.
Tons of info, and don't be afraid to ask your lender or your real estate agent.
They probably know about this stuff.
They should. They're the experts.
They'll love doing these deep dives. You always learn something new.
Right, that's the goal, right?
Okay, so we've talked down payments.
Mm-hmm.
Now let's talk about the other big piece of the puzzle.
All right.
Interest rates.
Big one.
They can really impact your monthly payments.
Oh, yeah. Even a small difference in interest rate
Right.
can add up to thousands of dollars over the life of your loan.
So we got to understand how they work.
Absolutely.
Huh.
And what can influence them.
Okay, so break it down for us.
Interest rates are kind of like a big stew
Okay.
with lots of different ingredients.
What are those ingredients?
The economy plays a role,
Makes sense?
inflation,
Yeah,
the overall lending market, all that stuff.
right. The bigger picture. Exactly, but your individual credit score and financial history
Okay.
are also key ingredients.
So the better your credit,
The better your credit, the lower the interest rate you'll likely qualify for.
so yet another reason to build that good credit.
It pays off in the long run.
Literally.
Literally.
Now, is there anything else we can do to, get a better rate?
Have you ever heard of buying down your interest rate?
Buying down the rate?
It's not something everyone knows about.
What is it?
Basically, you pay a little extra upfront
Okay.
to lower your interest rate over the life of the loan.
So you pay more at the beginning to pay less over time.
Exactly. If you plan to stay in your home for a while,
Right.
it can be a really smart move
Interesting.
because the savings you get on those monthly interest payments
Okay.
will eventually outweigh that upfront cost.
So it's like an investment.
It is an investment in lower monthly payments.
I like that.
Good.
Okay, so we've got down payments, we've got interest rates.
Mm-hmm.
There's one more thing I want to ask about. Negotiation.
Okay, good one.
Is there room for negotiation in this process?
Absolutely. It's not a one-way street.
So we have some power
You have the power to negotiate with lenders
to get a better deal.
to get the best possible terms for your loan.
I'm a little scared to negotiate, though.
I get it. It can feel intimidating.
Any tips?
First, do your research.
Okay.
Compare loan offers from different lenders.
So I know what's out there.
Exactly. You want to know what's possible.
Right.
That gives you leverage when you're negotiating.
Okay. What else?
Don't be afraid to ask for what you want.
Ask for what I want.
Whether it's a lower interest rate, lower closing, costs a different loan term,
Be clear.
be clear about your preferences.
Don't be shy.
Don't be shy. Advocate for yourself.
I like it.
And remember, lenders are businesses.
Right.
They want your business.
They want to make a deal.
They want to make a deal. So don't be afraid to shop around.
To find the best one.
Find the lender who's really willing to work with you.
This has been amazing.
I'm glad you think so.
We've gone from understanding income and credit
Mm.
to strategic down payments,
Right.
negotiating with lenders,
You got it.
even finding those down payment assistance programs.
Don't forget those.
I feel so much more prepared now
That's the goal.
to tackle this whole mortgage process.
You've got this.
Thank you so much for all these incredible insights.
You're very welcome. It was my pleasure.
And thank you all for joining us on this deep dive into the world of mortgages. Remember, knowledge is power.
Keep learning, keep asking questions.
And keep dreaming of that dream home.
You'll get there.
Until next time, happy house hunting.
Bye, everyone.